Every day, people are buying property. It seems so easy. Surely it's smooth sailing. How could it be that hard? Sometimes things happen along the way, and these things could cost you hundreds, if not thousands of dollars extra when you buy property. Here are 5 things that could help you avoid paying those extra costs. Welcome to Money Shape Up, where we help you build your money muscle so you can get money fit. I'm Linda Hamilton, author of Pay It in 5. I'm here to share tips on how you can make money work for you. If that appeals to you, hit that subscribe button and make yourself a regular here. Tip number 1. Work out the property value before you actually make an offer. We're very lucky these days. Online, we can actually find out a property's value if it's not on the market. One way to get clued up on what a property is actually valued at is to look at the property values around that property. So you can have a look at the property next door and the property on the other side and the property across the street and a number of properties around there to figure out what the value is of that property. Doing your research about the property value can give you an indication of what the value of the property that you're looking to buy is. So, for example, here you have one property that's up for sale and the property next door is the same as that property. You can also look at the land value of the property. Now, land value prices are actually available online. They're usually backdated slightly, so it might not be a full indication if the market is changing a lot. Look at similar properties around the area and the value of those properties, as well as look at the land value of that property. Tip number 2. Stay in regular contact with your lender, your real estate agent, and the solicitor while you're purchasing your property. Sometimes they will make decisions on your behalf and you won't find out what they are, but they will make those decisions. And if you're not staying in regular contact, you will actually have no idea that those decisions have been made until possibly it's too late. On our first property, I called the real estate agent. They told me that we needed to push back the settlement date. That seems really odd because everything is in place. There's no reason for us to push back the settlement date. I then contacted the solicitor to figure out what's going on. They told us that the government incentive that we were going for wasn't available and we had to wait until after we had settled on the property. The solicitor wasn't aware that we could actually afford the property without the incentive, and they assumed that we couldn't. Now, if you know anything about settlement dates, if you push a settlement date back, that means you wear the costs for pushing that settlement date back. And the costs are incurred every day. And not only are they incurred every day, but there's interest applied every day. So it actually costs you a lot of money if you push back the settlement date. So our motto was to never push back the settlement date under any circumstances, if we could help it. Your lender, your real estate agent, your solicitor, they don't have to wear the fees if you push back the settlement date. So there's no negative consequences to them. They will make decisions on your behalf, even if they impact you, and they might not tell you until it's too late. In this situation, we didn't even know they had made a decision to push back the settlement date for us. It was only because I had contacted them, we pushed forward to meet the actual settlement date, so we weren't hit with all those fees. You're the one that needs to call your lender, your real estate agent, and your solicitor so that you can make sure that it's running smoothly and to make sure that no decisions have been made on your behalf before you actually buy, and things that will cause you consequences and make you pay more fees. If you're ready to take the next move to get strategic and plan before you buy a property so you can take the emotion out of buying, I've created a free masterclass to walk you through step by step how to start with your why so you can get laser focused on what you want. Comment below with the word masterclass and we'll send you the link. Let's get back into it. Tip number 3, be ready to buy. You might be thinking, but I am ready to buy. I've got my pre-approval, I know what I want to buy, and I know what I'm doing. One issue that we encountered that we weren't expecting was we found a house, we made an offer, the offer was accepted. We went back to the bank and said, well, our offer's been accepted and we're ready to go. They put the full approval through. It didn't actually go through. The pre-approval doesn't mean that you will actually get approved for that loan. We went through the pre-approval process and we did it properly. And at the end, they still said, well, you can't borrow that amount of money. We were shocked and upset because we were about to lose our deposit because we thought we had made everything clear. We were transparent about our income and our expenses. The reason was because I had a casual wage. If you have a casual wage, they will say, no problem, we'll include the casual wage, it's not an issue. But when it comes actually down to purchasing a property and getting the final approval for that, the casual wage might not be accepted. So when we met with our lender, I had been open and honest and said, I have a casual wage. It's a bit all over the place. It's quite sporadic. The lender said, not a problem. We'll work it out for the whole year because a casual wage is acceptable. But then when it came to actually buying, we were asked for 2 or 3 consecutive pay slips. And I gave them my last 2 or 3 pay slips that were consecutive for me. But what they wanted was 2 or 3 consecutive pay slips that were in a row. Now, I didn't have that because I would work sometimes for a couple of weeks, then I'd have a couple of weeks off, and then I'd work for another 3 weeks. It wasn't consistent. It wasn't something where I was consistently getting paid. So my casual wage wasn't accepted. Luckily, my husband was in a full-time wage and his pay was accepted, so it just meant we could borrow a lower amount. It was lucky for us that we were purchasing something that was affordable and something that we were aiming to pay off in 5 years, because we were looking at more expensive properties and we were considering buying something that we could pay off, say, in 10 or 15 years. And it was just lucky for us that we didn't end up deciding on a property like that. So my husband's wage was able to carry our approval through. It just meant we could borrow a little bit less. For us, it worked out. We didn't lose our deposit. But something that you need to know and to be ready for is to know what evidence that you need to provide to get the actual full approval through. If you have a casual wage or you run a business and you're not getting a salary from somewhere else, or you've been in a job for less than 6 months, then you need to find out exactly what you need to provide and have that discussion with your lender about what could prevent us from actually getting the full approval. What other things do I need to take into account to actually be able to get the home loan fully approved? This caught us off guard. We were just lucky. One other thing to get ready before you buy is to give yourself a buffer. Now, by a buffer, I mean some extra money that you've saved up that you can use just in case you need it. Now, we've needed it every time we've purchased property. We've needed a buffer, and we've needed it for different reasons. In the next episode, I'll talk about one hidden surprise where we needed our buffer, and it's not always smooth sailing when you buy property. Tip number 4, move mountains to meet settlement date. Earlier, I told you our motto for never pushing back the settlement date if we could help it. Something else that happened to us on our first property purchase was that we were told that we needed to move back the settlement date again. And this happened the day before we were settling. And the reason this time was on the vendor's side. It wasn't on our side. It was the person that was selling the property to us couldn't meet the settlement date. I asked around to work out, what does this mean for us? Because we were renting. If we didn't move in the next day, then where were we going to go? Because our rent was finished and somebody else was moving into the property that we were in. We had our truck lined up to move. We had everything ready to go. We were ready to settle. but the vendor wasn't ready to settle. There's no repercussions for if the vendor pushes back the settlement date. We don't get paid the extra money to help us accommodate for rent somewhere else or to cancel a truck. We found out that we could actually move into the property even if the vendor wasn't ready to sell. This was gold for us because we were like, well, we're ready to settle, and if we're going to settle and we're going to pay, then we're moving in. So we pushed forward and we ended up settling on the correct settlement date. This saved us hundreds of dollars. If you can, push forward and meet that settlement date. We actually encountered another issue on our second property. I want to talk about this one because this is where we really moved mountains to meet our settlement date. It always happens like a day before, 1 or 2 days before, there's some kind of thing that pushes back the settlement date. And I don't know why, it's always at the last minute. Our solicitor called us to say, well, you wouldn't believe it, but we're going to have to move settlement date back. She said, well, there's one document that I didn't get because I didn't think we needed it, so I haven't got it. And it was one that was quite difficult to get because the property was so old. I said, well, I'll go and get it. I had 2 young kids in tow. I think it was even raining that day. It wasn't like I could just go to some building and then someone would just give me something. It was, I went to some building, I stood in line for I don't know how long, to then be told to stand in another line, to then be told to stand in another line, and I was there for hours and I was just going all over the building, paying out money that needed to be paid to whoever needed the money. In the end, I paid for everything for it to be done by midnight so that we were ready to go the next day. And I basically moved mountains to make it happen, to get that document, because I was like, we're not pushing back this settlement date, because we push back, we pay, we're going to be ready to go. In the end, we were ready to go and we pushed forward with the settlement date. What happened then was that our vendor then said, well, now we're not ready for settlement and we need to push the settlement date back. So we had another situation of we're about to move out of our property, and if we can't settle, then we can't move out and we have to live in limbo for who knows how long. We already knew we could move in because we had done that before. Wherever you are in the whole week before you settle, make sure you have no plans other than maybe you're working and you can take time off if you need it in that week. Whatever you can do, move mountains to meet your settlement date so that you can move in and you can settle on the correct date. If you settle on a later date, you will wear those costs. There are fees and charges that you're hit with if you move the settlement date back. For the majority of properties, this never happens. If you are serious about buying in the next 6 to 12 months and you'd like to work directly with me to help you create a plan specifically for your situation, comment below with the word waitlist to make it happen. Tip number 5 is know your buying budget. Now, we tend to think of our buying budget as our deposit plus our home loan. And so, for example, if you have a deposit of $150,000 and you are getting a home loan of $400,000, we tend to add those two together, which makes $550,000. And we say, well, we can buy something for $550,000. Not so fast. Before you go and do that, there are some additional costs that come into play. In the next episode, I will talk about one hidden surprise that could come up when you're buying. This is something that impacted us before we bought our property. It was lucky that we had a buffer, and I'll tell you about that in the next episode. It was something that was very unexpected. And in episode 8, which is That's Not a Buying Budget, This is a Buying Budget, I will break down all of the expenses that could come up when you buy a property, so you know what to be aware of and you know what to factor in when you're buying property. So know your buying budget. Now, your buying budget is not deposit plus home loan. Your buying budget is deposit plus home loan minus all these additional costs. Before you go, because you've made it to the end, I would like to show my thanks with an exclusive offer for you. I launched Money Shape Up in 2025, and each month in 2025, I'm giving away a free copy of my book, Pay It In 5. If you'd like to win a copy, click on the link in the description and tell me what it was about this video that made you stay to the end. I believe in sharing knowledge and resources, and I love hearing stories on how this helps you. Happy house hunting, and see you again in just a moment.